Hi there, welcome to Kneppyinvests. December quarter reporting season has come to a completion. Any companies that were supposed to release their quarterly report for the December quarter and haven't done it, more than likely they have gone into suspension. I'm not sure if that has happened, but it does happen on occasion for some quarters. And more than likely, those companies that haven't released their quarterly report, they might be in administration or something like that. Now, I went through every single quarter report. Some of these reports I skimmed through, had a quick look, but overall I came out with over 100 companies that I do find a little bit interesting based off their quarter report. Now, I would like to do a dedicated video on all 100 companies, but I just don't have the manpower and the time to do that. So unless you have some sort of time machine, sort of like what Hermione had in Harry Potter and the Prisoner of Azkaban, I'm going to have to just do with not doing a video on all these companies. However, there is a little way around this. And what I decided to do is I'll do these group videos where I'll just look at a fairly quick look at 3 companies that I do find interesting. And I'll do a series of these videos, and today is the first of these videos that I'll be doing in this series. So let's get stuck into it, and the first company we'll be looking at in this video is XReality Group, ticker code XRG. I know this company as Indoor Skydive, which is with a ticker code IDZ. And when they were IDZ or Indoor Skydiving, I didn't really see much of a future for that company, but management have decided to diversify. They still have those indoor skydiving locations, but they are now a builder and operator of virtual reality, augmented virtual reality, and simulations for enterprise, defense, and consumer leisure. And that's the main reason I do find this company interesting right now. Not only do I find what they're doing interesting, because that is definitely a growth area or potential growth area in the future, for the December quarter, they were actually operational cash flow positive by $967,000, almost $1 million, even though the receipts of customers was only just above $2 million. They did receive $430,000 in government grants and tax incentives. Now, the market cap of XRG is at $26 million. That's at a share price of 7.7 cents. They only have $1.4 million of cash, so that is a little bit lower than I would like it. And they also have $7.6 million of debt, which means the enterprise value is over $30 million. So there are a few small red flags there. The fact they do have a little bit of debt, 7.6 million, but they are operational cash flow positive. Now, the other red flag I have for XReality Group right now is the cash receipts history. So let's have a look at that. Now, I am probably being a little bit unfair on XReality Group because these cash receipts go back to December quarter 2019 when they were Indoor Skydive. And if you look at the receipts history, it's really flat over time. And on occasion, especially during lockdown periods, we do see the receipts fall off a cliff, like in the September quarter 2021, went from $2.2 million to $620,000 and then rebounded to $2 million in the most recent quarter. But this doesn't take into account their virtual reality, augmented virtual reality, and the simulation endeavors. And there is that possibility we'll start to see receipts grow through time from here. Now, I don't know if I can guarantee you that right now, simply because I'm not sure how popular their virtual reality, augmented virtual reality, and simulation endeavors are right now. And I have to have a closer look at their Appendix 4C. And I would like to wait a little bit of time just to see how they are progressing in those new endeavors. In saying all that, the market has loved this transition of XReality Group from Indoor Skydiving, and the change of name I think fairly strategic. It does sound futuristic, XReality Group, and the market really has loved this transition. You can see in November, if you do have access to this video, that the share price increased from 2.5 cents to a high of 9.5 cents during a 3-week period. So there was a little bit of hype in this company towards the end of November last year. Share price has gone on a roller coaster ride since then, falling all the way back to 4.5 cents. And in the last few trading days, the share price has recovered nice from that weakness or overall weakness in the market. And it's currently trading at 7.7 cents. That was the end of trading on the 1st of February. So it looks like the share price of this company is in an uptrend right now, and there's a fair bit of enthusiasm about this company, particularly around they're moving into virtual reality, augmented virtual reality, and simulations. The next company I will look at is Capricorn Metals. I actually did do a dedicated video on this company for the September quarter, and this company has been or is progressing really nicely from when I did that video. And there are a lot of things to like about this company, Capricorn Metals. They are a gold producer in the Pilbara region of WA. They have an open pit mine. A lot of that stuff might not mean anything to some people out there listening, but when you look at the cash flow statement, it does look really impressive, particularly the operational cash flow, $31.9 million of operational cash flow for this particular quarter. Now, they have only been in operations for 2 quarters, and that's the reason why they are still issuing Appendix 5Bs. Eventually, the ASX will tell Capricorn Metals they don't have to issue these quarterly reports anymore because they are operational cash flow positive. The market cap of Capricorn Metals right now at $3.24 is $1.2 billion. So the market really likes the future of this company. They have $27.4 million in cash and $75 million in debt. I think that debt level has been dropping because they are paying those debt down. But again, the most important thing here about Capricorn Metals is receipts are at $73.9 million, but more importantly, they are cash flow positive to the tune of $31.9 million. Now, because Capricorn Metals has only been in production for 2 quarters, we don't have much history here. So I really can't take away a lot from their receipts history, but receipts did climb from the September quarter by 22.1 million, up from 51.8 million to 73.9 million. And if this trend continues in the future, and apart from what I've just read in the Appendix 5B and the commentary, I don't know a lot about this company right now, but the trend looks pretty good. And the other thing that looks really good for Capricorn Metals is the share price chart. So let's have a look at the chart right now, and there's a lot of positive sentiment behind this company at this point in time. Onto the daily chart for Capricorn Metals. This goes back to late June 2020, but the main period of time that I'm interested here has been from April 2021 to right now. A nice developed uptrend has happened with Capricorn Metals share price. So even though there has been a little bit of weakness in many gold companies on the ASX, particularly big gold companies like Northern Star, Evolution Mining, lots of those companies' share price and their charts don't look that attractive right now. Capricorn Metals has gone in the complete opposite direction, a nice developed uptrend, and we have seen 3 pivot points, and those pivot points are when we see a short-term downtrend. The share price hits the 100-day moving average and starts going back up again. We saw that happen in July last year, towards the end of September, and then just a few trading days ago during the overall weakness in the market. So a nice developing uptrend with Capricorn Metals, and just because we've moved off the most recent pivot point only a few days ago, now could be a good time to take a position in this company. And that's on the assumption that this trend in the share price for Capricorn Metals will continue in the future. The last company I want to talk about in this video is Kyckr. Now, this company has been around on the ASX for maybe 5 or 6 years, and even though I have been tracking how they've been performing in their Appendix 4Cs, it hasn't been up until now that I've taken any interest in this company. Kyckr aids companies, they have a platform that aids companies to deal or handle with anti-money laundering regulations. They were established in Ireland, which is interesting because email payments have had some problems with their Irish subsidiary in regards to money laundering activities. So maybe Kyckr could have helped email payments deal with that solution. But even though they were founded, or this company was founded in Ireland, they are traded on the ASX. Now, one of the reasons why I have become a little bit more interested in Kyckr is they did have a fairly good Appendix 4C for the December quarter, $1.7 million of receipts. It was a record quarter for the company. But even though it was a record quarter for the company, they're still operational cash flow negative, and for this quarter, that's $771,000. So what I decided to do is start a little bit of research on this company, just in anticipation that we might see some better quarters in the future. But at this point in time, I think it's good to remain patient, with these companies just to see how they progress in the future. No reason to take a position in this company just yet, but just open up the research in the company. The market cap of Kyckr, 28 million. That's a share price of 5.3 cents. Another interesting fact about this company is they do have $10.6 million of cash. So the enterprise value right now is less than $20 million. But they are burning through cash on a consistent quarter-by-quarter basis, and they also have zero net debt. As I said, I have been tracking the quarterly reports that Kyckr have been releasing over the past 5 years, ever since the September quarter 2016. The interesting thing about this receipts history is receipts are growing through time. They've increased from 143,000 to 1.7 million in the most recent quarter. Now, you probably could argue it's not really impressive growth, but it is growth. There was a period of time here where it didn't look like it was growing all that much, but over the last 3 quarters, we have seen receipts get above $1 million in a quarter twice. So maybe this company has reached an inflection point and they have started to see their receipts and the customer base starting to accelerate. That's just a possibility. I'll probably have to do a little bit more research on the company to figure out if that is exactly what is happening. But the very fact that we have seen receipts grow beyond $1 million on a quarterly basis is one of the reasons why I have put this onto my watch list, and I want to do a little bit more research on this company. And one of the other reasons why I think we can be patient with this company just to see if the momentum they experienced in the most recent quarter can continue over the next quarter, next 2 quarters, or even the next few years. The fact that they are operational cash flow negative, and that will have to improve, and if we do see cash receipts improving and they don't increase their cost base all that much, this company could become operational cash flow positive within the next 2 years. But overall, there is a little bit of negative sentiment within this company. If you look at the daily chart, over the past 18 months, the share price has gone down. So no positive sentiment right now with the share price action in this company. And that's another reason I think we can be patient moving forward with Kyckr. That's all I have for this video on 3 interesting stocks on the ASX. I'm probably a little bit more interested in Capricorn Metals over the other 2. And if I have to decide between XReality Group and Kyckr, I'd probably put XReality Group just a little bit above Kyckr, just because they are operational cash flow positive. And I do find their movement into virtual reality and augmented virtual reality an interesting step for the company. If you do have any questions about any of these companies that I've shown in this video, please leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.